Good night, my name is Gillian Bento. This is the video final presentation for the Intermediate Accounting 2 class. On this project, we are going to be analyzing the Apple company. Apple is an international organization that designs and procedures electronic equipment. The company designs, manufactures, and markets mobile communication and media devices, personal computers, and portable digital music players, and sells a variety of related software, services, accessories, networking solutions, and third-party digital content and application. The company products and services include iPhones, iPads, Macs, iPad, Apple Watch, and Apple TV. It has been loyal to its design and marketing strategy over the past 33 years and have been able to position itself as a cult brand that is known worldwide for its innovative and market-leading business operations. For Apple, its strong cash position is major strength. The company holds cash and cash equivalents of $20.4 billion and also holds $46.67 billion in marketable securities that can easily be converted into cash. And all of this is held overseas, and the company will have to pay US taxes on the money to bring it into the country. That is why the company prefers to borrow money to engage in its share buyback program. Net property, plant, and equipment during the last 3 years has had a positive behavior. Apple machinery, equipment, and internal use software increased from 2014 to 2015 and from 2015 to 2016. Capitalized costs related to internal use software are amortized using the straight line method over the estimated useful life of the asset, which range from 3 to 5 years. Apple has invested in its fixed asset by expanding its retail segment, which explains the slight decrease in return on gross assets. As final analysts state, the return on assets should not undergo 5%. Apple is in a very good position with a return on assets of 15.07%. During the past years, the company has invested in capital equipment as needed to meet anticipated demand for its products. In past years, company retail stores have required an enormous investment in equipment, leaseholds improvement, information system, inventory, and personnel. Certain stores have been designed and built to serve as high-profile venues to promote brand awareness and serves as vehicle for corporate sales and marketing activities. Because of their unique design elements, locations, and size, these stores are substantially more investment than the company's more typical retail store. A high return on shareholders' equity expresses a company's effective employment of stakeholders' investment and in return high earnings for the stakeholders. Return on shareholders' equity shows how well a company uses investment funds to generate growth. Return on equity is used for comparing the profitability of the company with a sector or industry. Apple ROE for 2016 was 36.10, which in comparison with Microsoft was 34%. They cannot compete with Apple. However, the ROE should be interpreted in relation to the debts, and Apple only has short-term debts, which the company covers quickly. The investment strategy of Apple can be considered as benefiting for both the company and the shareholders. Depreciation is computed by the use of straight-line method over the estimated useful life of the assets, which for building is the lesser of 30 years, or the remaining life on the underlying building, between 1 to 5 years for machinery and equipment, including products, tooling, and manufacturing process equipment, and the shorter of lease term or 10 years of leasehold improvement. Apple's current liability at the end of 2016 was 79 billion, which is a lower value in comparison with the same period of 2015, where the company's current liability were 80 billion. If we break down the current liabilities, we can observe that accounts payable increased from 35 billion in 2015 to 37 in 2000. However, the accrued expense decreased in 3 billion. The current portion of long-term debt increased from 2,500,000,000 in 2015 to 3,500,000,000 at the end of September 2016. The company's other non-current liabilities in their balance sheets consist primarily of deferred tax liabilities, gross unrecognized tax benefits, and the related gross interest and penalties. As of September 2016, the company had non-current deferred tax liability of 26 billion, and the total other non-current went from 36 billion in 2015 to 36 billions in 2016. As of September of 2016, the total amount of gross unrecognized tax benefit was 7.7 billion, of which 2.8 billion, if recognized, would affect the company's effective tax rate. As of September of 2015, the total amount of gross unrecognized tax benefit was 6.9 billion, of which 2.5 billion is recognized, will affect the company effective tax rate. The company issued unsecured short-term promissory notes, they call it commercial papers, pursuant to a commercial paper program. The company used net proceeds for the company paper program for general corporate purposes, including dividends and share repurchases. As of September 2016 and September 2015, the company had 8.1 billion and 8.5 billion of commercial paper outstanding, respectively, with maturity generally less than 9 months. The weighted average interest rate of the company's commercial paper was 0.45% in 2016 and 0.14% in 2015. As of September 2016, the company had outstanding floating and fixed rate notes with varying maturity for an aggregate principal amount of 78.4 billion. In the company's opinion, there is not at least a reasonable possibility the company may have incurred a material loss or a material loss in excess of a recorded accrual with respect to loss contingencies, including matters related to infringement of intellectual property rights. However, the outcome of litigation is inherently uncertain. Apple's apply fair value accounting for all financial assets and liabilities and non-financial assets and liabilities that are recognized or disclosed at fair value in their financial statement on a recurrent basis. When determining the fair value measurement for assets and liabilities which are required to be recorded at fair value, Apple considers the principal or most advantaged market in which the company will transact and the market-based risk measurements or assumption that market participants will use the price, the assets or liabilities, such as risk inherent in valuation techniques, transfer restriction, and credit risks. At the end of October 2016, Apple issued 5,332 shares of common stock. All of them were outstanding common stock, an additional paid-in capital of 0.0001 per value. The company stock price has practiced considerable price instability in the past and may stay to do it in the forthcoming. Furthermore, Apple Inc., the technology business, and the stock market as a whole have practiced thrilling stock price and capacity variation that have affected stock prices in ways that may have been unconnected to this business operational performance. The valuation techniques used to measure the fair value of the company debt instrument and all other financial instruments, all of which have counterparties with high credit ratings, where value based on quote market prices or model-driven valuation using significant inputs derived from the corroborated by observance market data. Increased volatility in the financial market and overall economic uncertainty will increase the risk of the actual amount realized in the future of the company's financial instrument differing significantly from the fair value currently assigned to them. Price volatility over a given period may cause the regular value in which Apple reacquires its own stock to surpass the stock's value at a certain point in time. Apple believes its stock's value has a revealed prospect of upcoming development and effectiveness. Apple also faith in its stock's value must reproduce prospect and that its cash dividend drift to continue at present ranks or raise and that its current share repurchase program will be fully accomplished. If Apple stock prices fail to accomplish expectations in regards of financial growth, productivity, dividends, share purchases, or other market expectations, Apple's stock price could decay considerably, which can represent a primary untoward influence on stockholders' reliability and staff preservation. Apple long-term debt-to-cash asset ratio increased from 2015 0.17 to 2016 0.23. It may suggest that Apple is progressively becoming more dependent on debt to grow their business. Apple has about $20.4 billion in cash and cash equivalents on its balance sheet. The majority of the assets included in its reserve is stashed in long-term marketable securities, meaning Apple plans to let those funds accrue interest for more than a year. Almost all of Apple cash and security are stashed overseas. Proceeds from the sales outside of the United States that Apple will not bring back because it will then have to pay U.S. taxes. There is no hesitation that Apple is scrapping in cash with its enormous hardware sales and has plenty of ammunition for probable achievement. Apple does not pay per share to its shareholders, explaining the dividend yields of 0.0. Therefore, the company has more financial resources to invest in its business and the development of its products to maintain a peer position in the market. Dividends paid by Apple during 2015 were close to $12 billion, increasing the expected total size of the capital return program from $200 billion to $250 billion from 2015 to 2016. Expectation of payment of 0.57 per common share each quarter was set up by the board of directors. The earnings per share allowed to profit of a company to its number of shares and therefore indicating on the company's overall profitability. Apple's EPS decreased from 2015 to 2016. This revealed an increase in investment in the company's share, which most likely resulted from Apple's positive consumer and investor awareness through the introduction of its new product developments. Apple categorizes its marketable debt security as either short-term or long-term based on each instrument fundamental prescribed maturity date. The company's investment in available-for-sale securities are reported at fair value. Unrealized gains and losses related to change in their fair value of securities are recognized in accumulated other comprehensive income, net of tax, in the company's consolidated balance sheet. Change in the fair value of available-for-sale securities impact the company's net income only when such securities are sold or another than temporary impairment is recognized. Realized gains and losses on the sales of securities are determined by specific identification if security cost basis. Company determines that impairment has occurred, it records a write-down equal to the amount by which the carry value of the asset exceeds its fair value. Other income and expense could vary materially from expectations depending on gain or losses realized on the sale or exchange of financial instrument, impairments charge resulting from revaluation of debt and equity securities and other investments, change in interest rate, increase or decrease in cash balances, volatility in foreign exchange rates and change in fair value of derivative instrument, increased volatility in the financial markets and overall economic uncertainty will increase the risk of the actual amount realized in the future of the company financial instrument differing significantly from the fair value currently assigned to them. Net sales consist primarily of revenue from the sale of hardware, software, digital content and application, accessories and services and support contracts. Apple Inc. recognized revenue when persuasive evidence of an arrangement exists. Delivery has occurred. The sale price is fixed or determinable and collection is probable. Product is considered delivered to the customer once it has been shipped and titled. Risks of loss and reward of ownership have been transferred. Based on the balance sheet, it's very clear that Apple have been investing in the acquisition of talent, technology, and production capacity during the past years. The company is been paying for a target company non-depreciating assets, payments made for property, building, and equipment, and payments made for goodwill, such an intangible value of acquired value of firms, customer, and reputation. Overall, Apple's history of business acquisition has involved relatively small companies. More often than not, the acquired firms have directly result in key new apps, product features, and services that have materially benefited Apple's core business and enabled it to expand into new ones. Included in Apple's accounting of acquisition are investments made to obtain a portion of a company, whether a team, a facility, or manufacturing equipment. This kind of selective investment avoids acquiring unwanted personnel, infrastructure, and businesses that are only a distraction and drag on operations. Apple revolutionized personal technology with the introduction of the Macintosh in 1984. Today, Apple leads the world in innovation with iPhone, iPad, Mac, Apple Watch, and Apple TV. Over the past year, Apple has proved to be a lucrative company to invest in, and it is likely that this trend continues for the following financial year. The company has increased the investment in research and development of new products and its retail branch. This has led to the launches of the iPad and the new iPhone generation and has brought the focus of public attention to the company, enhancing its image and increasing its desirability in the mind of shareholders and investors. Apple has increased its revenue by more than 50% and is taking a leading position in the personal computer market despite the intense competition and price sensitivity of the customers. The software and online services Apple is offering through third parties such ebooks and gain popularity. A negative effect has been recognized when analyzing Apple's efficiency in using its resources. The stock turnover decreased compared to the previous year, which affected the cost of sales and fixed asset turnover. It is recommended to continue the trend of high investment in research and development, as this is the key success factor for Apple to be one step ahead of its competition. Additionally, the service offers through third-party supplies in the range of music, ebooks, and applications for the mobile phone should be kept up as they increase the popularity of Apple products. Furthermore, Apple could compensate the negative effect of the decrease in the stock turnover by introducing improvement in its marketing and promotion efforts to boost sales.